Let's move on to markets in its neighbour, Kenya, turning our attention to the NSE 20, looking at 4,763 points. That market shedding 22 points, almost 23 points on the day. Looking at how the currency is faring against the greenback, you're looking at that shilling coming in at 83.85 against the dollar, steady as she goes this hour. Well, let's cross over to Nairobi right now, where we've got Ian Gachichio, the research analyst at Kestrel Capital, standing by from our Nairobi studios. Ian, thanks very much for joining us today. So if you could just run us through activity today, because certainly we're seeing selling pressure from last week continuing on the market.
Yeah, certainly. And thank you, Samantha, for having me. Basically, today we've seen the same trend as last week, save for Friday, where we had the index edge up a little bit. But today we've seen the market turnover remain in the zone of 200 million Kenya shillings, around the early $3 million dollar zone, and basically active trading on the banks. We have active trading on ABL as well. Safaricom, of course, in anticipation of full year earnings. Mm-hmm. So we've seen active, and the foreign investors have been strong on the buy side. We've seen this trend also last week, and some local investors also active on the selling side.
Let's look at some of the stocks that have been in focus and certainly are always in focus when it comes to foreign buying. But Kenya Commercial Bank, it's up about 40% this year, not 0.4%, 40% this year, and pretty much around 2.3% below that closing high of 42.5. Is it likely that the stock's got more leg room to move higher? I mean, what's going to be the main catalyst to drive the likes of KCB specifically stronger right now?
It'll be the anticipation of quarterly earnings in the first quarter of this year. We feel KCB, as if you observed last week, it didn't really fall as much as, it didn't have as much volatility as much as Equity Bank and say maybe Coop, and we expect basically foreign demand to remain strong. Of course, it's an industry leader, and that should drive the counter up, probably even beyond 42 if you price in the earnings, and going forward into this year, pricing in the earnings to come forward.
What's your view right now on banks and quality of assets this year, given, of course, they have been lending large amounts into the economy? Do you think that asset quality is under strain or could be potentially under strain?
No, I don't hold that view. I feel banks are really going to experience a lot of organic growth this year from growth in their loan book. We're actually seeing that. We've seen housing finance basically set the trend, growth in their loan book and growth in interest income from that, as well as shrinking deposit expenses. So I think as far as asset quality goes, our banks, a lot of the big banks are well capitalized, and we think organic growth will actually support their earnings as well as their capital buffers going forward.
Mm-hmm. Let's just talk about oil marketers, Kestrel Capital and Total. What's your sense as to which of the stocks is a better investment right now, if you're looking at the kind of likelihood of Kenya becoming an oil and gas player, and of course one of these two companies potentially benefiting, or perhaps both of them, of course, benefiting from that?
Pardon? I didn't get the last part of your question.
What's your bet right now on Kestrel Capital versus Total? I mean, which one is likely to come out on top when it comes to benefiting from developments in the oil sector in Kenya?
Well, hard to say between Total and Kestrel, of course. But I would say for Total, of course, it's reached, it's surpassed, it has a 97% foreign ownership. So I guess the oil discoveries would benefit the oil industry as a whole. Perhaps Kestrel Capital has an advantage because of a wide retail outlets across the country, and so. But I wouldn't want to pick either. I would more look at the industry in terms of how it's going to benefit from the oil, and maybe oil and gas as well. Maybe some gas finds as well. But I would look at the industry as a whole.
Lastly, Ian, let's just talk about a supermarket company, Uchumi, and I suppose no direct competitors on the local bourse, but we know Nakamut is a stronger competitor. Do you think that the 8.5% drop-off or selling that came through today represents a buying opportunity? I mean, what's your thoughts on the investment case for Uchumi right now?
Yes, I do support your view on like it would actually be a good opportunity to buy Uchumi right now. We saw the CEO released information that Uchumi is planning a branch expansion opening. The board has approved in the region of 6 new branches to be opened this year, as well as more branches to be opened in Tanzania, Uganda, I believe, and I think we should generally see the company report strong earnings growth going forward in the medium term, based on that branch expansion as well as general economic growth, and also the interest rates do affect this in terms of people's disposable incomes as well. So inflation stable, we expect more people going into the supermarkets and higher earnings for the sector as a whole, and Uchumi definitely presents a good opportunity right now.